Hello, everyone. My name is Lucian. Most of you know me from Twitter as Triangle Investor. In today's edition of CEO and Market Expert Interviews, I'm glad to host Scott Melbye, Uranium Royalty Company CEO, Executive Vice President for UEC, Uranium Energy Corp, and a President of Uranium Producers of America. Scott, it has been a few months since our last chat. Welcome.
Hey, thanks, Lucian. It's great to be on your show as always. 2023 was an amazing year, and 2024 is only going to be that much better. I know uranium investors are very excited and well-deserved rewards for their patience. So
Exactly. So let's kick off, like you said, with 2023. It is a year behind us. It has been transformative year for uranium and nuclear energy market. But what would you underline as the most important event or events for 2023?
yeah, I mean, I think what was really significant is how quickly we transitioned. It wasn't that long ago that we talked about inventory overhang and secondary supplies and underfeeding and all these things that caused the uranium market to be in oversupply. And how quickly that changed. I mean, we should have seen it coming. The production discipline really that started in 2017 continued and was made even more acute through COVID. That really helped work down the overhang, and then the speculative investment buying by Yellowcake and Sprott and other companies buying uranium at really undervalued prices really accelerated that drawdown to where we suddenly found the market in a very real structural deficit without inventories to moderate it. A structural deficit is not new to us. We've been in one for some time, but with the inventories there, it really moderated any sort of price increase. So it's not surprising we've seen the uranium price hit $91, $92 a pound in the spot market, because you just can't find significant volumes of uranium in the spot market right now.
Yeah. One of the major things is that U.S. House has passed the bill banning uranium imports from Russia. The bill must pass the Senate and be signed by the President Joe Biden before becoming a law. But nevertheless, Scott, do we know when will Senate vote be held to ban Russian uranium? It only needs, I think, 2/3 of 100 votes now, rather than 100 full votes in December, to fast track it, but it was then blocked by Mr. Cruz. My main question, how will this impact the uranium market?
Well, I'll learn a lot more on this topic over the next 2 weeks. I'm headed to Washington, D.C. tomorrow, and we'll be meeting with Senator Cruz's team and others on the Hill. First of all, I think it was encouraging because at the end of last year, we saw the Nuclear Fuel Security Act, the authorization bill that would recognize that we need to revitalize the uranium conversion and enrichment industries in the United States to get back up to the levels that we were previously. We obviously dialed back our industry to make room for the Russians. Their behavior in Ukraine obviously changed all the thinking on this. And so that passed. And then we had unanimous support of the Russian uranium ban in the House, and pretty much unanimous support for the uranium ban in the Senate, including Senator Cruz. But he used his power. That this was a unanimous consent vote, which means when a bill is put forward, if no one objects to it, it passes. So Ted Cruz, even though he supports the Russian uranium ban, or he purports to, he's holding it up because he's upset that his bill that had to do with semiconductor chip manufacturing in the United States and fast tracking, which is also a very important issue, but he's really kind of throwing a tantrum and holding up this bill, which has unanimous consent, to draw attention to his bill, which didn't get passed in the National Defense Authorization Act. So it's unfortunate. Of all 100 senators, a guy who has significant uranium operations in his state, where obviously we've sent very strong letters expressing how our employees and our stakeholders and our landowners in Texas aren't happy. So we'll obviously appeal to Senator Cruz to change his position. If he doesn't, then you're right, it can go to a more normal floor vote. Now, the challenge there is there's a lot of things that need to come to the floor of the U.S. Senate in House and Senate in the new year, including the budget discussions, funding the government, border issues, and Ukraine and Israeli Gaza issues. So I'm encouraged because it shows there's unanimous support for nuclear power on Capitol Hill. There's a recognition that the fuel cycle needs to be revitalized. And in a way, the way you can look at it is the Nuclear Fuel Security Act is the government's side of the equation. The government is going to take steps, but what will really cause private industry to invest is the uranium ban. If we know that Russia is eliminated from the market going forward, we can safely invest, across the whole fuel cycle, billions of dollars to build up uranium conversion and enrichment, knowing that the Russians aren't going to just undercut us and dump uranium, 3 or 4 years down the road. So I'm encouraged. Washington, they say watching bills pass through, legislation to pass through to law in Capitol Hill in Washington's like watching sausage being made. You don't necessarily want to see all the ugly details, but we're in the middle of the sausage making right now.
Yeah, but Scott, what will be the impact on the uranium market if this goes by? I believe it will be a major one.
Yeah, so the Nuclear Fuel Security Act basically extends the strategic uranium reserve to become a strategic enriched uranium reserve. So that will provide a very welcome stimulus for domestic suppliers. UEC was one of the successful bidders, and that was a nice bit of business for us to participate in, and it will also help in terms of our restart of our operations in Wyoming and Texas. The Russian ban, I think, really sends the strongest message. And I know there's some concerns. Well, we don't want to ban Russian uranium and put some plants at risk. There are provisions in that legislation that if a utility absolutely cannot source it anywhere else, there's a waiver until 2027 that would allow them to continue to get deliveries. But I think, there's an equally important thing to note here is that the Russians can cut us off at any moment.
Yeah.
And they've done that with other energy commodities in Europe. And so I think, we'll be on the Hill the next 2 weeks, really impressing on how important it is to pass this. But listen, the market's in a very healthy place right now with uranium prices increasing the way they have. We have a structural deficit that needs probably 8 to 10 new mines coming online worldwide between now and 2030. And that's a very elite group of if you're able to bring a mine on into production in that time frame, you're in a very special place. Yeah. I think you saw that with Boss Uranium in Australia trading overnight up significantly. UEC is in a similar position. You have other U.S. producers, but these, we have visibility to those mines, but we need 5 or 6 more, and that's where we have to go to new mines starting up initial production, and we're finding that's not easy. Take Global Atomic in Niger, which is a great company, great management team, deposit, great mine plan, and they're faced with political, geopolitical risk there. So it's not easy bringing on new production, and even with the mines that are coming online, it's not huge production and it's incremental production, which ramps up. So I don't think you see. I saw one analyst recently say, "Oh well, at $92 a pound, lots of uranium is going to come online and knock the price back down." That would probably be true in copper or gold or silver, or other traditional commodities, but not in uranium, where we have such a structural deficit. The barrier to entry is quite high. And so I think, you don't have to be afraid that we're at a market top here. If anything, we're at the very early stages of this bull market. And, the uranium price could increase dramatically and it's not going to really increase how much uranium can come in given the permitting, licensing, and startup challenges.
Exactly, exactly. And Scott, does the US have a long-term plan, or better to say, outlook for 2035, 2040 of the percentage of uranium to be produced domestically?
I'm not sure if the US government has given that target, but I've provided my personal goal as the Uranium Producers of America. I gave a presentation recently at the Nuclear Energy Institute where I felt that the US industry can produce anywhere from 22 to 25 million pounds annually. Now, that's not tomorrow. That's with a ramp up of several operations. But I believe that's a reasonable objective for our industry. Now, that's less than the 40 million pounds a year we produced in 1980. And I'm not saying 25 million is a cap on how much we can produce. But given the amount of licensed facilities, I just look at the line of sight to UEC's operations in Wyoming, which we'll have news on very shortly regarding restart of operations there. We have Texas. These are licensed operations, in some cases with full infrastructure in place, and some well fields only needing incremental well field capital expenditures. I think that's a reasonable target in the coming years. I think UEC's reasonable target is within 5 to 6 years we could get up to probably 6 million pounds between Texas and Wyoming under these market circumstances.
I will ask you more details about that in the later part of the interview, definitely. One more question regarding, you mentioned Department of Energy Strategic Reserves buying. So we can expect more programs like that, but it will be expanded with the enrichment and conversion too, right?
That's correct. Yeah, I mean, we're finding that it's not just the uranium that we need to revitalize. We need additional conversion capacity and enrichment capacity. And my message on the Hill is a common question I get from senators and congressmen are, well, will this work? Will these bills actually achieve? And I believe they will, because the combination of the government stimulus and kind of kickstarting and causing the market to move more quickly than it would under its own power, and then the market impacts and the Russian uranium ban certainty. I think between those two things, you'll see investments. On the enrichment side, you've already seen Urenco in New Mexico, I think, take a 15% increase in their enrichment capacity there. So I think, listen, we're all capitalists. If we see the market is stable and strong, we'll all invest and we'll close that gap. But it's not going to come quickly, which is good for investors, because I think the thesis for investing in uranium now is, I don't think you have to fear the flash and crash that we saw in the 2007 market. I think the fundamentals, the legs under this market now are much stronger and much longer term fundamentals holding up this market.
Definitely. One question regarding Russia. Scott, do we actually know how much of uranium is still coming from Russia?
Yeah, what's interesting is until the ban goes in place, there's been sort of a rush to get enriched uranium imports out of St. Petersburg and into the U.S. Now, they're already capped by the suspension agreement limitations that went from 25% of the U.S. market. I think they're now currently at about 20% of U.S. demand can be filled by those Russian imports. So those are still coming in. The uranium in those 20% of the enrichment supplies is all from Kazakhstan. If you take the uranium concentrates dependency that we have, Kazakhstan, Uzbekistan, and Russia comprises 50% of what we consume in the US for 20% of our electricity. So it's still pretty significant. And I think we can talk all day long about government policy and Russia bans and all this. I think we also need to look at Kazakhstan and see what's changing there so dramatically with Russia and China. If the world is bifurcating into two markets, maybe along BRICS lines, I'm pretty sure Kazakhstan goes with Russia and China, given the borders they share there and the initiatives they're taking. The Russians have really moved to consolidate ownership and control over half of Kazakh production, and the Chinese are moving to control much of the other half of production through direct ownership in joint ventures, through huge contracts they're signing, and some Alasenko sort of warehousing arrangements across the Kazakh border in China. So I think we have to really be reminded, let's not be so focused on the legislation. There's a global market out there, and China and Russia are taking moves to assure that they have uranium supplies that aren't encumbered or controlled by the European Union, by the EU, or the US. And I think this becomes more acute should China move on Taiwan. It just makes the situation that much more severe. And so the message to our industry in the West is we need to build up Western uranium fuel cycle capabilities. And you sitting in Europe, I think that means the US, Canada, Europe, Australia, Western nations, need to, really ensure that we have uranium and nuclear fuel supplies for our nuclear reactors in the West. And you see that through G7 actions, and governments recognize this. The UK government's putting money into HALEU fuel manufacturing, as we are here in the US. So the steps are being taken. I mean, I wish the world wasn't splitting into two camps, but it is. And so we just have to make sure that we're taking care of our needs. I know the Russians and Chinese are, so we better keep up with this resource competition that we're in right now.
Yeah, you actually answered the majority of my next question, and that is China and Kazakhstan. That is the part of the market that maybe puzzles me the most, or maybe interests me the most. Scott, is there, do we have any informations? Is any uranium coming out from trading hub in Alasenko to the west?
Nothing. Everything that goes into the Alasenko trading hub, it sounds very global in its name. It's a global trading hub. It's basically a warehouse where uranium goes to, and once it crosses the border into China, it will be consumed in China. And that's not lost on the Chinese, especially if they're in an invasion of Taiwan. The more physical inventories they have on their territory, the more mines that they control in places like Africa or Kazakhstan, the UK, the US, Europe can't cut it off. So Alasenko sounds good, but it's basically just another way for the Chinese to get more uranium coming across the border to them and less to Russia and less to the West. Now, Kazakh uranium is still making its way to the West through Russia and through the Black Sea route, but it's very costly. The Russian route is complicated by basically sanctions and issues regarding shipping out of Russia. The Black Sea route is going through 4 or 5 countries, including some of which that are in civil war. We have cost that's probably 10 times the normal amount, so that becomes an issue as well. And so I think it's been proven to be feasible to take material out there, but it's limited in terms of volume, and it's very costly. So I think you'll still get some materials coming out of Kazakhstan through these various methods, but going forward in 5 or 6 years' time, I would predict the majority of the uranium produced in Kazakhstan is consumed in Russia and China.
Yeah. Like you said, Chinese have been aggressive in locking up supply by increasing ownership and mines and JVs in Kazakhstan. But do you see them expanding, let's say, on Africa's soil, on buying African assets? You mentioned, let's say, Global Atomic DASA project. It's a brilliant project, I agree. But do you see any scenario where China would take over that project?
I'm sure they have eyes on that. I'm sure the Russians have eyes on that. We've seen the Chinese, how aggressive they've been in battery metals and other critical minerals around the world, and taking huge steps in South America, in African countries, not just coming in as an investor, but coming in with the Belt and Road concept and just, basically coming in at the government level, building ports, railways, highways, and in exchange kind of holding those countries captive to their commercial interests. So I definitely see that happening, which is another reason why we need to make sure that in places like Canada, the United States, we're doing everything we can to develop our resources. So permitting, licensing, needs to be streamlined as we're doing with critical minerals and rare earth minerals. We have to kind of open our eyes and say, if we want the green energy economy, it runs on mined minerals like uranium, copper, nickel, lithium, cobalt. And so we better not just say, oh, well, no, we'll get it from the Congo. Well, the Congo, one, I don't know what the health, safety, and environment standards are there, but much of it could be going to China anyway. So I think this is the era for North American uranium supplies. I think it's really great news for Saskatchewan. It's really good news for our member companies here in the United States, the Uranium Producers of America, and places like Texas and Wyoming. I think we'll see very significant growth, and it's exciting. I mean, we've known the potentials there. There's 1 billion pounds of known and likely resources in the Western United States, but we kind of became complacent on sourcing from Russia and Kazakhstan in recent years.
Yeah, definitely. Scott, I saw yesterday that Bank of America has just released a new uranium sector report in which they dramatically raised their spot price forecast from $78 or $80 to $105 for 2024 and $75 to $115 for 2025. My question is, would you say those numbers are realistic? And what numbers do you use for forecasting uranium prices and consider reliable source?
Yeah, well, it points out an important note that a lot of the research reports, if you're following banks or brokerage firms that are putting out research reports on uranium mining companies, there's going to be a lot of them, and it's begun. You saw Bank America and others have begun to update their pricing forecasts. And just on the update of the pricing forecast, the target prices for all your favorite uranium companies are going up, understandably. Now, those companies have to make sure that they haven't capped off their upside by contracting with ceilings or base prices. That's a whole nother topic.
Yeah.
But this is largely underway. There's nothing to keep uranium price from going into the $100 per pound range. I mean, the only thing that will cause it to top out and moderate is getting that new mine production in place, because the inventories won't moderate it. They're not there. So you need new mine production, and that depends on ramp up of production, timelines to development, permitting, all these things, political risk. And so I think do I think that the market has the potential to significantly overshoot what should be the market equilibrium price? Absolutely. I mean, that's how markets work.
Yeah.
But I think we're very far from that point where the market, starts seeing a top. We're very much early stages, and $92 a pound seems like a high price compared, historically. But with inflation and everything else, it's not that unrealistic. And remember, the price of uranium, does not play a huge impact on the generating cost of the electricity. I'm not saying utilities don't want to buy at the best prices they can. It doesn't kill the golden goose if uranium goes to $150 a pound. It may make some infinitesimal impact on rates or have some impact on profitability. But electricity prices are very high around the world, and these nuclear plants are really being valued for their carbon-free baseload power. So we really have a good situation where the uranium price can increase pretty significantly, and will. It's hard to forecast, though. I mean, you're not in a market like we think of forecasting prices from our economics 101 classes, where we find the market's equilibrium clearing price. where demand and supply meet in that, that graph that we're all familiar with. We've never been at that point in the uranium industry. We've either been way below it or way above it because we're not an efficient market. We don't have the liquidity and in copper, if you had these circumstances, there would be standby mines in various countries that could be brought on rather quickly that would moderate the increase. Well, we have very low lows that continue for longer than they should be. And then we have very high highs that go well beyond what the equilibrium market clearing price is. So I think for investors, that's very exciting that we are in an efficient market. If it was efficient, maybe uranium should trade for, $100 a pound, and that would be fine, and the market would clear at that level. But I think we're going to go significantly higher than that.
Agreed, Scott. Let's move to Uranium Royalty Corp. What is new over there? How was 2023? What can we expect for 2024?
Well, what's exciting is, this need for new mines is keeping us very busy as we look to come alongside companies that are positioned to either restart operations or bring on new operations. We, as a capital provider to new mine developments, it provides a lot of opportunities for us to be that capital provider and grow our portfolio. So that's the number one activity that I'm engaged in, and I frankly love it. Going to places like Perth, I probably need to make a trip to Africa here in the new year and sit down with management teams and say, what do you need to get into production? Is it 30, 40, 50 million? We may not be able to lift the total capital required, but we can be a part of that capital stack. And we're very competitive with debt financing and equity. And so, we're very active there. We had a lot of activity in the physical uranium side, both some buying and selling. But as we finished the year, we now sit with 2.5 million pounds of inventory, physical inventory, which at $92 a pound is worth $230 million. And our market cap's 280 million. So we're in a situation where there's a lot of real unrealized value, because I can tell you our royalty portfolio is worth a lot more than that, with Cigar Lake, McArthur River, Langer Heinrich starting up, Lance in the various stages of starting up. And just our model to grow that portfolio, I think we're really in an undervalued state. So I would expect us to do very well. We've been I think over the course of last year, we were one of the best performing resource royalty and streaming companies. As we were in 2021, we fell back with the uranium stocks in 2022, but we were back up towards the top of the list. I think all uranium equities in the last few weeks, it feels like a bit of a pullback. And I'm a uranium expert. I'm not a markets expert, but it feels like this pullback was a bit of a consolidation, and kind of not a bad thing in preparation for the next leg up on the bull market. So I think I've had some investors call me and am I concerned about this? I'm like, no, I'm not concerned at all, because the fundamentals have never looked better. But if you're seeing some of your favorite uranium equities have been trading down over the last month and a half, 2 months, it's a great opportunity to add to positions, because I think we're, as I said, we're awaiting the next leg up, and it's coming soon.
Yeah. And Scott, what can we expect in the terms of possible news flow from the company in the upcoming period?
Well, I think for us, the big thing is adding new royalties and streams to the portfolio. So it's hard. We've got 5 or 6 files on the go. It's hard to handicap how many of those will be successful, but that's that will always provide for a re-rating of the company with every, if we're doing our job, and we don't have very much GA and overhead in a company like ours. So every time we add a royalty or stream and we've paid the right price for it, it should be an accretive acquisition, which kind of grows our valuation. And that's important to point too, is we've been very disciplined in terms of what we're willing to pay for royalties and streams. I think it'd be a mistake to just overpay and add royalties to the portfolio and then be burdened with that. So we're always balancing growing the company with being disciplined and deploying capital wisely. So that'll be that. On the UEC side, it's going to be a very exciting year. As you know, we spent pretty much all of last year prepping for restart at Irigaray and Christensen Ranch. That's everything from testing pumps, valves, flow rates, the electronic control systems, replacing where things need to be replaced, hiring, and pretty significant hiring activities to get back into an operational mode. So I don't think you'll have to wait long now to get some news from us on that front, but we'll be very excited. It's much more exciting to be dealing with the challenges of restart than dealing with the shutdown and care and maintenance activities that so many projects have been on in recent years. So should be exciting. Wyoming will be the first to move. And then Texas, we're also obviously been very active at Burke Hollow to ensure that it can follow in maybe 6 to 12 months after Wyoming. So
yeah.
And it's a objective to be UEC is looking to be a very significant leading global uranium company with production, 5-6 million pounds a year out of the US, and at the same time developing the assets in Saskatchewan with Rough Rider and surrounding deposits that we have there. Really looking at what's the right model there to develop those assets. Those are not going to be as quick to market. Could be a 6 to 7 year process, but we're very much in those early stages of getting our arms around, those projects being brought to fruition as well.
But do you expect more M&A in the Athabasca or in the United States? You recently acquired from Rio Tinto exploration projects, like you said. Do you see more M&A from your side? I mean, and generally.
Yeah, for us, I think we're very happy to have invested $600 million into the market when market prices were $20, $30, $40 a pound. We actually made really great investments in Rough Rider and Uranium One and UEX. So we're probably more focused on now bringing those projects into production. But I think in the space there is a lot of opportunity. You think of the biggest M&A deal in our space last year was Cameco's alliance there with acquisition, I guess you could say, of Westinghouse.
Yeah.
But that doesn't bring new uranium production. That actually just brings more draw on uranium demand from Cameco's side. And so, what our acquisitions have done have been to grow uranium production in our portfolio. I think some of the majors, whether it's Cameco or Orano, Orano, particularly with challenges in Niger, they've been very careful to maintain, strong relationships in Kazakhstan, but they need to also build out their capabilities in other countries like Canada. So I think there is a lot of opportunity for consolidation, M&A. I think it's not long before we see utilities making investments. If it's getting very difficult for them to contract for uranium in the open market because existing mines are becoming fully committed, well, it becomes a little bit like GM, Ford, and Chrysler with lithium, investments that they've made to ensure that they have. It stops being about, saving 50 cents or $1 here and there, and it starts becoming, resource security. And so I think that's coming. I wouldn't be surprised to see oil and gas companies come back into uranium as a green energy diversification from their fossil fuel operations. Probably a lot better fit to oil and gas, especially ISR mining is very, much more similar to natural gas production than it is their investments in wind and solar, really there isn't synergies there.
Yeah.
So yeah, it's a good time for UEC to have all these investments made and building them and bringing them into production at a time like this.
Yeah, you also had one significant news with TerraPower and Uranium Energy Corp announced to collaborate on domestic uranium fuel supply for Natrium reactor. Can you tell me more about this deal? What are
Yeah,
the next steps?
that's very exciting. We kind of closed that around the time of the COP28 meetings in Dubai, and we had a nice dinner with the TerraPower team there, and we're very excited about the collaboration. And it's just a recognition that, on our side, we think SMRs have an unbelievable future globally and in the United States. And to see it happening in Wyoming, where we're based, we feel very honored to be working with them. From the TerraPower side, they realize that, they need to have supply security for nuclear fuel, and they have the added challenge of needing HALEU fuel. So it's very encouraging to see the U.S. government stepping up and industry stepping up to make sure that the HALEU fuel is available for companies like X Energy and TerraPower that use that sort of higher octane enriched uranium fuel. And but I think they also realize that they can't also ignore the uranium supply in a competitive market where existing mines are all being kind of committed under contract to other buyers around the world. They have to be cognizant of their customers' needs for uranium. So it's really a cooperation agreement where we just look to cooperate in every way that we can to help further their interests in Wyoming and frankly in export markets. And they look to potentially be sourced from uranium from Wyoming into uranium being consumed in Wyoming reactors, which is a pretty exciting story.
Definitely. This was Scott Melbye. Scott, as always, I enjoy talking to you. Thank you for taking the time, and I wish you luck.
All right. Thank you very much. Always a pleasure.